Welcome to the Point of No Return podcast, a show at the intersection of technology and strategy. On this show, we interview industry leaders and experts to better understand how they think about strategy during this time of exponential progress.
Hey guys, welcome to another episode of the Point of No Return podcast. Today's a very special show. On top of it being the 50th episode, which for me is a special milestone. I didn't really think that we'd hit 50 episodes. It started as a bit of a hobby and now it's kind of grown into a life of its own. So I'd like to thank everyone for sticking around. The second reason why it's special is because we went deep into a really interesting subject, one that I've been learning a lot about recently, which is blockchain and Bitcoin. We spoke with Fred Dionne, CEO at IVEP and founder at DubDub. Fred was named one of Canada's top tech lawyers and innovators. He has a degree in computer science, legal, and finance. He's the founder and CEO of IVEP, which stands for Interactive Video Experience Protocol, which is a spin-off from DubDub. IVEP is trying to disrupt the traditional digital advertising space. And we really went deep into, what they're doing, the ICO that they're launching. Prior to IVEP and DubDub, Fred founded a very successful law firm called Blue HF, which is basically one of the main law firms in the tech space here in Montreal. We were also joined on today's show by Mike Cohen, who leads engineering at BlockSense. Mike is a renowned blockchain expert, and he's gotten his hands dirty in various industries. And he recently came back from a conference that focused just on blockchain in Mexico. The dude seriously knows his stuff. And we also had my business partner, Martin, who joined in on the conversation. So it was a good four-way chat. We had a really good conversation about the nature of cryptocurrency blockchain. What is the difference? And a bit of start off as a simple explanation of these various terms. But then we went deep into how, what is blockchain? It's more than just a store of value. How do tokens accrue their value and their utility? We then spoke about the startup IVEP and how they're planning to disrupt the ad model. So if you're interested at all about blockchain or Bitcoin, I really suggest that you stick around. It was a great chat, bit of a longer chat, but honestly, I learned a ton and I hope you do as well. Thanks. Fred, Mike, thanks for being on the show.
Thank you.
It's a real pleasure to be here today with you guys at WeWork to talk about a subject that I'm extremely interested in as of late, which is all things cryptocurrency. I've spent the last few months trying to understand it, and the more I learn about it, the less I know, I feel. So I'm really happy to have two smart people that are here to basically help me understand and hopefully help our audience understand. I'm also joined by my business partner, Martin, that's been on the show as well. So maybe first question, Fred, just give us a little bit about your background, and then I'll ask you, Mike, to do the same.
Yeah, sure. So I have a technology background. When I was young, I created software for my mom's business, actually, which improved her sales quite significantly. And so afterwards, I decided I was going to study computer science at UDM. Unfortunately, it wasn't meant for me in the sense that I think 4 courses out of 5 were pure mathematics, and I'm a creative guy. I wanted to code software, so I decided that's not for me. Dropped out. And then went into the army as a platoon commander for a few years. Just for fun. It was a great experience for me. Taught me a lot of different things about life. And then I went to law school, discovered business law, was hooked to it, love corporate finance, work at big firms. The first firm I worked at was Stikeman. At that time, it was 1997, and we were right in the middle of the NASDAQ bubble, the first internet bubble. So was involved with some IPOs. At that time, you were called IPOs. From 1997 to the beginning of 2000, started a location-based technology company in 2000. Afterwards, I joined the technology business group at Osler in Montreal with the fabulous team of Brian Levitt, Shayar Gindi, and Ward Sellers, and We worked there for about 4 or 5 hours. We were a very active technology business group working on financing for startups, technology companies, venture capital funds. Then decided to create my own corporate finance firm, called Blue HF. Did that in 2005. Been a successful firm. Working for VCs, technology companies. So I've been always involved in technology, working technology with entrepreneurs, and always been passionate about software, and mostly lately about open source software. Was investor in a few startups, some of which did pretty well, and so it gave me the chance to start my own actually and go back to my earlier passion, which was software. And it was the right time because everything was happening on the mobile. We were seeing a shift towards mobile, and with mobile video in particular. And that's when I decided to create DubDub. And now we're at the next stage with Web 3.0. We'll talk about it later.
All right. Well, I'm Mike Cohen, and I'm a computer hardware engineer. My educational background is that, and I been through various stages in my career where originally I started out doing hardware development, programming, what's called FPGAs, field programmable gate arrays, that are basically the mock-up that you create to test a piece of hardware before you implement it into an integrated circuit and make 1 million copies of it in China, because you want to make sure that thing works. And so that's kind of how I started. And then I went through various iterations. I was a math teacher for a bit. I worked for a material handlings company in the mining sector and stuff. And in around 2011 or so, I heard about Bitcoin at first, and it sounded super interesting, some kind of internet funny money you could send around. And it was kind of eye-opening, and at the same time seemed a little too much too fast, and there was a lot to dig into. So started scratching the surface and was interested, but beyond that, kind of left it at that. And then after a little while, started working with another organization called Sensorga, where we did open source hardware research and development, and the people that were in that organization were all very passionate about various things and new paradigms for work and economy, and of course, kind of Bitcoin and cryptocurrencies were always, the ideas were floated around. And one day while working there, a project came across our desk for basically a access control management platform for physical spaces that would be run by a blockchain network. And it was in part a private R&D project, but it was aided by the IVEP program, the federal government, NRC. We were actually the first blockchain R&D project that I know of. I think that's what they told us anyway, with the National Research Council. And after working on that project, really digging in and trying to understand how this stuff worked and making a viable proof of concept, we realized that there was something there, especially because that project wasn't Bitcoin based. It was based on private permission chains, which are more akin to smart contract programming on the Ethereum platform, which I'm sure we'll delve into a little later on. And because all the contributors that participated in that project really saw that there was something interesting, like really kind of paradigm changing, we decided to form this new application development and consulting firm called BlockSense. And that's where what I've been doing for the past year and a bit is working in different capacities on either developing applications or consulting an enterprise on how blockchain networks can change business models today.
Thanks for the intro, guys. And before, what I really want to talk about today is dub tokens, your project, Fred, that I find really interesting. But before we get into that specific project, I want to kind of demystify some of the basics, at least maybe for myself, right? So I see kind of three core areas to explain, right? One is blockchain, then cryptocurrency. So the two most popular being Bitcoin and Ethereum, and why maybe there are hundreds of others that exist, Bitcash, et cetera, and then finally ICOs. So maybe I'll kick it off to you, Fred, to start.
Yes, you know, the blockchain, I'll just let Mike, you want to describe the blockchain,
Sure.
and then I can talk about the ICOs. Okay, guys, yeah.
So, a blockchain is basically a network data structure. So, it's a mechanism for adding data and sharing data to a store that is shared amongst a bunch of different participants, that once it is written, it is indelible, it can't be changed. And the access to write that information and to put something that will basically be, you know, the written in stone, that access is what makes all of this possible, is they're all backed by a consensus mechanism. Different blockchains have different consensus mechanisms. Some of them are stronger or looser. That depends on the properties you're trying to achieve. But, on top of that, the original application was Bitcoin, exchanging value between, two parties on the internet, and making sure that that value, the only thing that really gave that value exchange a backing, was the fact that the transaction was registered and everybody agreed that it had occurred. Which, you know, when you think about it, that's basically what happens at your bank anyway, right? The fact that money came in, money came out. When we look at another development in that technology, would be smart contract programming. And that is tying to these consensus mechanisms and to the value exchanges, basically logic. Just making sure that whatever we want to occur has definitely occurred and can't be changed. And so that's the guts behind a smart contract. And so that's where Ethereum came in.
Okay. So it might sound stupid. So we're talking about a protocol, essentially, right?
Right.
Like FTP, right?
Sure.
Or that exists.
Yeah.
And that lives in the cloud, that no one owns, that's completely decentralized to a certain extent, but I can create my own version of a blockchain, for instance, right?
Sure. Well, I mean, it doesn't exactly live in the cloud, because the cloud is generally managed by an organization. The public blockchains are managed by just about anybody who wants to join, right? And there are different roles. So you can either be a miner or a validator, depending on the consensus scheme you're working on, or you could just be a node where you replicate what has happened. And you can just be a participant where you don't actually run the network, but you register transactions or attempt to register transactions on the network. And then, like I said, in Bitcoin, those transactions are just exchanges of value. And in Ethereum, they can be exchanges of value, but they can also be the execution of some code.
So just to make sure to attempt to clarify for the people that aren't too super technical, but it's basically a distributed transactional database. So a database of transactions that lives and evolves on the internet on thousands of computers, and that's updated, that's synchronized within itself.
And that more or less, when, again, going with the Ethereum example, act as one giant computer.
Right.
Right. So there's what's called the Ethereum virtual machine is like one giant machine
Yep.
that executes one contract at a time based on, is it its turn to run? Have we funded it? So that's
Okay. So when people, just again to be very clear, when people talk about Bitcoin, so Bitcoin basically is a virtual, it's a cryptocurrency that lives and that's tracked on that kind of distributed database.
On that blockchain, yeah.
Right. And people like you and me can buy pieces of it at a certain value that's
determined by the network, effectively.
Offer and demand, basically.
Yeah, exactly.
Like gold or like whatever else that.
Sure.
Okay, interesting. So I think Ethereum is one of the big ones that's people are starting to talk about. And you just kind of described it. How would you describe it to someone that's like or what do you think the biggest misconception is about Ethereum?
Well, this is interesting actually, because I was just at this conference in Mexico, and my mom was kind of confused because she's like, "Why are you going to Mexico? It's some computer conference in Cancun or something," and so she did a little investigative work of her own, and figured out where it was, DevCon 3, and what this whole Ethereum thing was about. And she came up on a website, ethereum.fr, the French Ethereum Foundation, explaining Bitcoin, or rather explaining Ethereum to your mom. And she regurgitated it to me, and it actually kind of made sense, and she was not wrong. And what she had said basically, was that it's like one giant computer that nobody controls, that every participant who wants to get something done has to pay to get it done, to pay to use the computer. And it records the results of whatever happened. So, and this is an analogy that's not accurate, but let's say you're playing a game of solitaire on that giant computer, which is what most people do on computers all the time anyway. So imagine you're running, well,
let's be honest.
My mom anyway. So if my mom were to play her game of solitaire on Ethereum, at the end of it, when the cards start flying around the screen and the result, her score, would be recorded on chain. And then that would be her high score for that time and that date, and it could never be reversed. And, I mean, So
it basically removes the need of having a human middleman. I think the supercomputer becomes your middleman, and it's transparent, it's trusted, and so this has huge implications in a lot of, especially in finance, and fintech, because take the example of the stock market or a bank, where if you don't need to have a middleman, it changes a lot. We can say it will disrupt these industries significantly.
Well, there generally always is one, right? Like whether it's a regulator or a bank or something in the fintech example. Right. But in my mom playing her game of solitaire example, like her high score is only stored on her machine, and if she had some low level knowledge of how that thing was stored, she could dig in, or probably ask me to dig in and change the high score, modify it, or maybe she never even played the game, right? And what blockchain networks and these types of new systems bring in is the fact that if you do something, if you play that game of solitaire and you get the high score, it will never be erased, and it can never be taken down or censored or hidden. And so there are tons of applications where this becomes very useful, because it couldn't really be done before.
Super interesting. And I was listening to you talk, and I think, I was telling Fred a few weeks ago, I opened myself a brokerage account to buy cryptocurrencies a few weeks ago, or about a few months ago. And like anyone that's kind of touched this or is trying to learn, one of the things that's incredibly unclear is the fact that I can go online and buy coins of Ethereum for about $400 right now that they're trading at. Sure. What is that like, other than it being a cryptocurrency, does that give me time on the big computer, or like that's the relationship that not many people understand?
If you want it to, it can. So with Bitcoin, all it really gives you is value that you can exchange. I mean, strictly speaking, it can do a few things, but in Ethereum, essentially owning that Ether, which is the currency on the network, allows you to execute any of these programs. You can call just about anyone you want at any time. Each program has its own individual address. You call the address. You can either fund it. Some of them are free. Some of them cost. And the execution of that, there's a parallel. Ether is the currency, and gas, just like fuel for a car, is the sort of cost of running the program. And there's a relationship between the cost of gas and the cost of Ether.
Okay, so it makes it much clearer. And I find that Ethereum is also one that is much more multifaceted than Bitcoin, because it enables other types of applications to exist.
Right.
Now, one thing I want to understand better is the notion of tokens and how that comes into play, and why the increasing popularity of it.
So, Ether is minted through currently a proof of work process, which is like the consensus algorithm that allows you to register something on the blockchain indelibly. So you have all these participants, and all of these participants basically take turns writing to the network and making sure that whatever has happened is guaranteed to be true. That process is what creates the Ether. Down the line, they're probably going to change the mechanism by which that happens, but it's sort of a technical decision. Where a token comes in is because Ether is minted on a daily basis. If you're trying to build an ecosystem where you have your own little economy, where you want to do either value exchanges or perform transactions or do something useful on chain or online even, then you bring a token in to distribute that value. First of all, because there's volatility associated to the current currency, and there's a lot of volatility associated to the tokens themselves. But you want to have this like unit of measure, this unit of account that you move around your own little ecosystem, depending on what task it is you're trying to perform. So a lot of these ICOs, this is what they're doing. They're trying to create these new platforms where there's a new business model or a new type of economy online, and the token is what's going to move around in that little ecosystem.
So now we can talk about ICOs, I guess.
Sure, we're getting into it.
What's an ICO? An ICO is an initial coin offering. We call that an ICO because some people made an analogy to an IPO, an initial public offering, but it's very different. Others will call it a token distribution event or token generation event. I like to call it a token distribution event, or TDE. It is, in fact, a new fundraising model for tech companies. So basically, a new cryptocurrency, a token, is created on a blockchain protocol such as Ethereum. Usually, what's very interesting about this model is it's done by a nonprofit entity. because the business model is different. The nonprofit entity will promote the advancement of science, open source technologies, your own protocol, the technology you're building, and many different things. But what's very interesting about this model is instead of building value for solely for your shareholders, as a typical company would do, you have a nonprofit, and the nonprofit cannot distribute profits, cannot make any profits. So the value is being shared with the members of your protocol. So they will get tokens, which will have a lot of different attributes. The tokens, first of all, are a license to use your technology. It's basically a license key to have the right to use a technology. But it can also have governance and growth attributes, trust attributes, in the sense that, and that part is very important because in many protocols, blockchain-based protocols, you'll need to stake some tokens to use the protocol. And if you behave badly, if you breach the code of conduct, you can see these tokens being seized by kind of either the community or the entity that's kind of overseeing the protocol.
So when a startup launches an ICO, they're essentially it's almost like crowdfunding in a sense, bypassing the traditional venture model where you're buying an opportunity for a product that hasn't yet launched. It's not an equity. It's a promise of a future product that itself can also grow in value. Is that an accurate description, or is it wrong?
So unfortunately, it depends on the one, right? Because because this is sort of an unregulated market where you can just about do whatever you choose to do.
Well, it's regulated. It's regulated,
right? Well, the lawyer says it's regulated, and the engineer says you can do whatever. But the point behind it is that you can design these mechanisms in a protocol or in a platform that either incentivize or disincentivize the users of that platform to act right. So if you don't play by the rules, you have a monetary disincentive that we can punish you programmatically, right? Punish you because you have a value in this network. So if you do something that's wrong, traditionally, if you do something that's wrong in today's economy, we'll take you to court and sue you, right? Well, not always. That very rarely happens. There's always mechanisms to settle. But this is basically an internet court a little bit. That's kind of why you call it a smart contract, because it makes sure that all the parties involved are performing the duties that they're meant to perform. And if they don't, then there's a stick, which is like the disincentive model that will go and recoup from the bad actions that they've performed.
So I guess I have a question for the same question for the engineer and for the business person, right? So on the bright side, the way I understand it is this has potential transformative power to realign incentives of an organization, right? So a shareholder, employee, and operators or management traditionally have three different types of alignment. This, by the power of tokenization, will potentially align everyone to look in the same direction, right? So massive transformation. That's on the one side. And the other side, I see things like Floyd Mayweather sponsoring tokens, and people, taking basically a lot of money off the table once they raise an ICO and essentially get rich quick scam, by having even produced a product yet. Versus, in any traditional, let's say, venture environment, well, there is a filtering system that allows people to not scam, right? right? So I see on the one end, yes, it's very unregulated, but it has massive potential. But there's also, it seems like, there shouldn't be ads on Instagram for ICOs, right? So where's the truth in all this?
So it's really unfortunate, actually, because it is so misunderstood and it is so easy to confuse. And I think the real reason why all these scams are thriving in this ecosystem, first of all, because there's no way to prevent these people from launching anything they want to do. But secondly, because I don't think anybody has really lost their shirt in the cryptocurrency game yet. And everyone has heard through a friend or a cousin or a brother-in-law or something that they made a bunch of money on this, that, or the other, whether it be Bitcoin or Ether or some new token. So there is a promise there, and there's a bit of a gold rush. And until basically earlier this year, it was just a bunch of nerds losing money to each other or spending money on each other. And now, and this is unfortunate because I was at an event not very long ago, about 2-3 weeks ago in Montreal, where they'll remain nameless, but it was it had a very Boiler Room vibe to it. If you've ever seen that movie, where they had a room full of 80 people. And I've been to all these meetings for years, and I didn't recognize a single face in the bunch. All these people were shouting questions, a big Q&A session with these two guys standing in front and talking about different coins and different things you can do with cryptocurrencies. And all these normal people were just basically shaking money at them, asking them, what's the next big one? And how do I invest? And all that. And that was scary a little bit, being involved myself, because as much as this is a mechanism of funding good ideas, it's also a mechanism of taking money from unwitting
let's
people.
keep in mind that there are a lot of scammers on the web, and it doesn't make the web a bad place to be. Right. So it's the same thing with ICOs. You'll see a lot of scammers, and that's why I think there must be some good due diligence. And the good news is that the market is currently auto-regulating itself. We see it now. We saw with Tezos, and obviously with Tezos we can talk about it later. But they clearly overlooked governance matters.
No kidding.
Yeah. We're seeing what we're seeing right now. It has shaken the confidence of those who contributed to that project. But there's a lot of noise, a lot of bad projects, but it's human nature. It's like this everywhere. And I think, when you go back to the first internet bubble, which I lived closely at Stikeman at that time, I remember we had the same discourse at that time. It was a lot of projects. We were looking at these projects and saying, "What? This is crazy. This is stupid." But at the same time, Amazon, Google came out from this first bubble, and so. When Mike says it's not regulated, I just want to point out that yes, it is regulated. You'll see there are two kinds of tokens, what we call a security token and a utility token. And a security token is clearly a securities and investment contract. You're subject to securities law, no doubt about it. A utility token, like we're doing at Dub Tokens, is not a security, and there's plenty of arguments to say it's not a security. Obviously, it's still a gray area because it's brand new. It's a new way of using a unit of account to create a protocol and a new business model. But it's still, in my own opinion, not a security. But it doesn't mean that because it's not a security that you can do whatever you want, right? The whole purpose of, you always need to understand what does the regulator want to achieve with this particular legislation, for instance. I think disclosure, being fully transparent, manage users' expectations or your contributors' expectation is super important. This model is very similar to a nonprofit raising capital for sick children. It's very similar. It's a very similar model. It doesn't make it a security because you're raising funds for a nonprofit. So it's very similar. Some people will say the cause is different. You're raising funds for sick children. Yes, but now today technology is really important in our society. And I think you can envision the ICOs that have, the right team in place with the right vision and a team that has demonstrated in the past that they are doers and serial entrepreneurs and you can basically trust them by giving them funds. They will have a fiduciary duty to manage your funds properly. But I think we're going in that direction. And one important thing as well is, because a lot of this technology will be open source, some project will fail. Most of them will fail. It's the 80-20-20 rule in business, maybe 90-10 rule in business. 80 to 90% of businesses will eventually fail. But if it's open source, you give to the whole ecosystem and the community a great legacy, because what you've done can be reused by other companies, compared to a private company which will have its own IP, private IP, and then if it dies, the IP dies with it.
So if I understand this correctly, there's a coming apocalypse probably. And when the next pets.com comes out, all the IP of the pets.com people will spread basically, right? So we'll be reusable.
I just want to get back to that point because it's a super interesting topic, and we're down the rabbit hole now, for real. So let's make the best of it. So there's two types of tokens, like you said, security and utility. That's pretty clear. If we apply that, so I'll get securities out of the way first. Securities is basically, as any securities, like it would represent equity, basically. For example, it has to be registered and that's regulated, right? Utility. So ICOX goes on the market and they provide service Y. So they put a coin out there that's worth something. Depends on offer and demand. And I like that idea, and I think it has a future. So I open an account with a broker and I buy $10,000 worth of that coin. What happens when that coin goes up to $50,000 in value?
Bitcoin.
Yeah, like Bitcoin or your Ethereum or whatever. There's a bunch of them. They go up and down. So I still maintain access to that, to the utility part, right? But now I have to declare a capital gain, I guess, at the end of the year. I should, right? That's the operative word.
That's the other problem.
So that, I mean, the net gain of the value of the coin to me is fairly clear. If you want to be legit, you declare it on your taxes. It's a capital gain. What's less clear to me is what happens if the value of the utility part increases. Is that possible? One, and two, how is that kind of managed? And
actually, it's interesting that you bring that up, because now you get into the design of how these ecosystems work, right? And often, for example, in Fred's example, he has an existing platform in DubDub that has an existing value, right? What people are willing to attribute to the use of DubDub.com there's a metric there. It's quantifiable. Whereas with some of these tokens, first of all, not all of them have these platforms up and running and ready to go. So, you invest, but you can't really use it yet until it's ready. And those deadlines sometimes are hazy. But the other issue is that you tie this market externality to the value of whatever it is you're trying to perform on your platform. So if, again, with my mom's example, if you're trying to keep track of solitaire game scores, whatever that is worth to someone, that has a value that's more or less fixed, right? It's just, there's a real world value to that thing. Now, if you tie it to a token where there's externalities of people speculating on them, you have to adjust for that value. And there are different mechanisms that you can bring in to create that stability.
And by the way, you should look at the new book that came out by Chris Berniske. I don't know how to pronounce his name. Berniske and Jack Tatar, Crypto Assets, just now available on Amazon, and it will define. I think it will answer your question. And there's a few models to also value these tokens. But
and
you know, all
nobody's
things,
thought of all of them yet, too. Right?
Exactly. But all things being equal, the value, the token will increase in value the more your protocol
adoption.
becomes, the more there is adoption to your protocol. And keep in mind also what I like about this model is these tokens. I don't like to use the word central bank, but for some project, it doesn't make sense to have an entity that will oversee the blockchain like Bitcoin. It's fully decentralized. There's no entity that's overseeing Bitcoin. And that's fantastic. But the use cases are limited. It's a value of exchange, and that's it. For other projects like us, we're creating. I think it's important maybe to give some context because we're creating the interactive video and experience protocol, a bit like Stripe did for e-commerce. With a few lines of code, they were able to add e-commerce to any website. With a few lines of code, we're able to add interactivity to any video that's available on the decentralized web. And
explain this. So I want to dive into, I think it's a good segue into dub tokens, right? So I'm looking at your pitch deck, decentralized protocol and DApp store. I have no idea what DApp is, for interactive video and experiences. So I see a lot of these, right? There's a lot of startups that have a pitch deck, a white paper, that have, that talk about the team and everything, right? So like how, I won't get into like how do you judge the quality of these, but
right.
I know you personally, so I'm like, you're an entrepreneur, you've done this before, right? So like I have now trust. I want to like understand what problem you're trying to solve with dub tokens.
Right. So we're in 2017, soon to be 2018, and I'm really surprised at, the progress we made with the internet. But one promise we did not, that was not made with digital is basically at the start, a lot of people thought that we could create more engaging experiences with digital experiences that would be unique to everyone. So imagine you're watching a video, and Mike is watching the same video. With digital, there are ways so you can watch a different experience. There's no reason why you should watch that same static video. And the reason why is that you want to create more value to your users. And when you look at the current ecosystem, the video content distribution ecosystem, it's either subscription based or it will rely on an ad model, which is mostly the case. And so you'll have pre-roll to monetize or mid-roll to monetize your video content. It's based on a CPM. So you'll have publishers who will have videos on their websites, and then you'll have an ad that will play at the beginning of a video, and they make money per 1,000 impression. During the last few years, there was a downward pressure on the CPM. So basically, what could be monetized for maybe $10 per 1,000 impression is now maybe $3 per 1,000 impression, because there's a lot of fake traffic, bot traffic, invalid traffic, fraud traffic online. And the current players don't have the incentive to fix that. The publishers right now, they don't have the incentive to fix that because they are being paid every time the video is being played automatically. But the end result is that the quality of the content is in a downward spiral. The RPM, the revenue per 1,000 impression for the publishers, is going down. Invalid traffic with AI with web crawlers and things like that is increasing. The CEO of P&G said earlier this year, digital is a mess. It's not working. So we're slashing the budgets, and we want to go back to TV because we understand that business. But when we go to digital, it's a big mess. And
Well, I'm going to say, is that because the internet is a mess, or is it because P&G is a mess? But that's a whole. We'll get into P&G because honestly, their model's actually not adapted to digital. It's adapted to mass market, right? Which is why they can't figure out the internet.
They have a huge budget, right? So
I understand, but Facebook is not for mass advertising. Google's not for mass. It's for individual targeted ads, right? Which is contrary to P&G hit everyone, with a hammer over the head with the same billboard, right? But I won't get into that.
But they still raise the fact that there's a problem. And when you dig deeper, there was this, if you look Google ad fraud, you'll see a lot of cases that were revealed during the last couple of months, and one of them was MedBot, and I think it was revealed by the beginning of this year. But hackers were making $5 million a day with invalid traffic, and so the blockchain is very fascinating for that. And I think it's the perfect technology to solve a huge problem of trust in that ecosystem. And so the publishers and the advertisers, they need to be able to ascertain themselves that the data that they are capturing is the true data, it's fully transparent, and it's immutable. But it's one thing to fix that part. It's another to fix also the end user experience. When you look at this, for 90% of the brands, improving the customer experience is the priority number one. So that's what we want to do with an interactive video and experience protocol, is basically improving the experience of the end user. So the publishers will improve their retention as well. And by improving their retention, they will have an incentive at adopting a technology that will benefit themselves, but also by using the blockchain, all the engagement metrics that are being captured by the audience will also be shared in a immutable way with the advertisers. And there's many ways, because when you have tokens, the business model is open. It's very fascinating what you can do. So in our case, the association, which is overseeing the protocol, will be incentivizing the good players, which are on one side, the software developers and designers. So that's why we're talking about the app store, which is basically a decentralized app store. Mike doesn't like the term, but that's what it is. And then we have the publishers, the content creators, and the publishers who will display engaging content with the features that have been built on the decentralized store. So you align the interest, you incentivize the good players, the two groups, so they work closely together. And then the publishers, we're not reinventing the way the ecosystem works. We just we're improving the ecosystem. So the publishers, as they get more engagement from the audience with interactive content, they can decide to also incentivize their own audience with tokens as well. But that will be up to them if they want to do that.
And that I think is the problem that IVEP is trying to solve, right? Is to verifying firstly that your audience is real, because that's the current issue in the advertising world today, is that a lot of the audience is not real. It's just a computer churning around doing the same thing over and over again and pumping up the number of clicks on that ad, or impressions. The other thing is, like Fred said, is aligning those incentives to make sure the behaviors match, right? And so if the behaviors are fraudulent or seem like they're irregular or whatever, then you want to be able to penalize or incentivize properly. And you do this through this protocol, like Fred was saying, these applications, by measuring the engagement of the user. It's very difficult for a computer to appear human if you have, like a CAPTCHA would when you sign up for something online and you have to recognize a weird pattern or click on the street signs or something. We're not saying that it has to be exactly that, but you have to have a mechanism that basically provides the same results of human verification, so that you are incentivizing the right people and taking away from those who are trying to game the system, right? The bots, the bad actors, etc. Right.
So it sounds like there's a lot of good that a few minutes ago we talked about a lot about the bad, the scams, the people making quick money on all that stuff. But it sounds like there's opportunity for a lot of good as well, because of that kind of guaranteed authenticity of the information. So I'll take the discussion back up the rabbit hole a little bit, because I get this question a lot. I'm very curious to get your perspective on the matter in terms of actual investment. So people buying currencies. We kind of work in a tech-ish field, and it's a topic that comes up pretty often, and I get the question a lot, like, do you buy Bitcoin or whatever? Do you recommend buying it? What are you doing? I'm very curious to get your perspective between, stay the hell away from it because it's the Far West and it's not ready yet, right, to sell your house and, go all in, or something in between.
Well, there's the typical Warren Buffett answer, which is like, put your money in stuff you understand. So if you don't understand it, maybe, whatever, or try and understand it as best you can before you do. And of course, I'm not a financial advisor, so I couldn't tell you how to use.
I'll give you my advice. I don't care.
Right. No. But I mean, that is to say, that thing that I was at a few weeks ago where people were basically like trying to throw money at some other guy to manage it for them. Actually, it's completely counterintuitive to this entire ecosystem, because that's the beauty of it, is that you don't have to trust anybody to manage your own money. You can do whatever you want with it.
Yeah. It's basically it's a question of risk management when you invest a portfolio. I think you'll see some people are now recommending to invest about 10% of their portfolio into crypto assets. I think that's the right thing to do, because it is the cat is out of the bag. It's going to just get bigger over time, and I don't think it's very, very difficult. Like when you are a VC, it's very difficult to know which one of your portfolio companies that will be the next big thing, right? It's usually a big surprise when it happens. You never know. So you need to, again, I would recommend definitely, I own Bitcoin, I own Ethereum, I will own DubDub tokens, I will own other tokens as well. A good article was written actually by an ex-VC at Anderson Horowitz. I can't remember his name, but he said the way he envisioned the future was that the stock market will change a lot, and we will invest, we will buy tokens right on the internet and own maybe 50 different tokens of 50 different startups, instead of investing on the NASDAQ or the
right. And at the end of the day, that's the other thing, is like, do you look at this as an investment, or do you look at it as a utility, right? Like if you as a user see a project where you see genuine benefits and they're really attempting to solve a real world problem, And it depends on the project. There are thousands. But if you get what they're trying to do, then it isn't even really an investment because you're going to be using the platform, right?
Right.
But if you're trying to buy in to make what they call going to the moon in this world, like holding it for as long as you possibly can till it reaches some number in the future where you're happy with it, that's a different incentive again, right? Like it's a different investment strategy. But I'm more of the opinion of if you're going to put money behind something, do it for something you consider useful or that solves a problem. And, DubDub's a great example that's a very clear problem that exists in an industry. And right now there are no workable solutions. And there's a lot of trust that is put into the ad networks, into the publishers, into a bunch of these actors in this industry that are difficult to trust because it's in their best interest to feed BS. Right. And this essentially, these protocols that are going to be created, whether it's IVEP with Dub Token or any other, they're trying to fix those problems. So if you find one that is
I just want to, there's a great article that was written by Todd Simpson at Innovator Capital. You should Google that article and to understand, the shift that's happening towards decentralized system. The center cannot hold, and we're witnessing a shift towards decentralized system. I think we went too far in the sense that the GAFA, Google, Amazon, Facebook, Apple, they control so much of the market. It's gone to a point where it's getting dangerous, I think. And the way the internet was envisioned, it was not like that. It was envisioned to be a decentralized platform, and we're seeing now go back on the other side.
Okay, so I want to fast forward 24, 48 months. Dub Tokens is mega successful. Describe to me a successful use case of your business model.
Yeah, so basically a successful use case is basically publishers having increased their retention with their audience, creating an experience, a better UX for the audience who can experience more engaging content, more informative content, because the end user basically has no problem watching a video if sometimes here and there's some product placement, as long as they learn something.
So who rewards the publisher? The advertiser.
Pardon me?
Who rewards the publisher? It's still the advertiser, correct?
Correct.
And
correct. With product placement, but in our case, the association, IVEP association, will also incentivize the publishers definitely at the beginning of the protocol.
Do users compensate at all, or is it just like skip ad like on YouTube, right? Like let's say I go on a publisher site. I'll take a practical example. Globe and Mail, right? I want to use your system because ad rates are dropping, as you said, right? There's fraud. Right. People are using ad blocker. Yeah. As a reader of Globe and Mail, how does that new experience enhance enhance the value I obtain?
So when you watch an IVEP enabled video, and we'll be, in the next couple of weeks, we'll be sharing a demo with the rest of the world, and so they will be able to actually experience an IVEP enabled experience, and then also get a bonus for the token distribution event. But basically, in that single frame, when you start watching a video, sky's the limit what you can do. You can present different options to your users, select experience A, experience B, or experience C. You can add interactive chat within a video. You can enable people to basically buy from within a video when they are watching a product review. So instead of watching the product review and then scrambling to search the product online, and so everything is done in that single frame, but you can also discover hundreds of additional video content based on what you're looking for. And so instead of having to open 50 different pages and looking for content, everything is done in that single frame. You don't need to look elsewhere. And the beauty of it, everything is customizable in real time. So with AI in the back end, eventually AI will be able to present you exactly what you're looking for based on your behavior and based on what you're asking for. And you know, in the demo, you'll be able to see a video that was created by Tourisme Québec, and the guy, it's a blind guy who came to Quebec and experienced a lot of different things, and it's a very fascinating video that was created by a friend of mine. But when you go in that video, you know, they go in Quebec City, they go in different cities, and they go to OSM. And so this is the perfect kind of video that can be monetized with smart objects, because when you get that clip of 10 seconds at the OSM, people are like, this is interesting. Where is it? Right? You can have a smart object that will pop on top of your video, which is not intrusive. It's not a pre-roll ad that's stopping your experience. It's very subtle, very non-intrusive. And if you want to book, you know, buy your tickets at OSM, you can do that. So the advertisers are very excited with this kind of technology, and the publishers as well, because they can increase their revenue. So,
and to echo what Fred is saying, essentially from the user's perspective, the value that this brings is that it makes videos browsable, right? Instead of browsing websites, you're now browsing videos through the way that you layer smart objects onto videos, and that's the browsing is the experience. But also from the advertiser's side, like, the advantage to them is the fact that now you have much more verifiable and provably verifiable metrics for the engagement of the user, and we can capture any number of data points through the objects, and those mean a lot more to either the advertiser or the person putting the video together, the creator of the content. So it's a two-side, you know, we're saying about aligning incentives. You have to give something to the user, but the person also footing the bill for this thing has to get something in return as well. And that return is essentially the provable, verifiable engagement that they get from users that currently they can't really get.
All right, yeah, it sounds interesting, and so, like, I guess we'll keep an eye out for that demo. I'd ask one last question. Do you guys expect all personal identification to move to the blockchain? Do you see that happening? Where, like, for instance, do you see like a social network happening where the data is not owned by, you know, this super corporate, you know, megalith in California, but it's owned by you, and you have portability and you own it. Do you see that happening?
Well, I know someone who's very well known in the community that's working on a decentralized social network, but I cannot mention his name for now. But to me, yes, it's a question of time. There's a lot of unknown in this market, but it will happen. I think to have the identity on the blockchain is something that would be very, very interesting and promising.
Well, I think the beauty of it is, you know, and without getting too technical, because at DevCon we talked about this a lot, but essentially it's not to put your actual identity on the blockchain, but to put a representation of it that you can prove, so that we're not actually divulging the attributes, say your name and your date of birth and your street address and all that stuff, and putting all that data somewhere on a blockchain and saying we're encrypting it so it's safe, right? It's to, take the example of Equifax a few weeks ago that God knows how many millions of dollars they lost through their data breach. You have to find a way to make that data uninteresting to someone trying to steal it. And if you're not actually storing those attributes, storing the information that identifies you personally, you're storing a verification of those attributes, and then you maintain the attributes. All you retain essentially is a way to show that, okay, if you go look here, I can show you something that proves that it's me. If you ask Equifax, for example, if you are Equifax and I need to prove to Fred that I am who I say I am, I can show Fred a piece of information that is not the actual information that identifies me, but then when he looks at Equifax, there's a mapping from the information that I've given him and the information that Equifax is holding that
but I think
matches.
the Equifax hack is definitely showing that it will become unsustainable for and too risky for big businesses to maintain sensitive information on the cloud, because it's a too big of a liability for them.
Guys, I want to thank you for your time. It's extremely interesting. I'm going to go and re-listen to this and write down notes. And maybe last question for you, Fred. Where can people find out more about your project, about Dub Tokens?
Yes, so they can find out more about Dub Tokens on going on dubtokens.com. They can also follow me on Twitter, Fred Dionne. So I try to post a lot of articles on blockchain and the project as well.
Okay, amazing. Thank you again.
Thank you, guys.
Thank you.
Thank you for listening to the Point of No Return podcast. Never miss an episode by clicking on the subscribe button on iTunes or Google Play.